Hey everybody, this is Jeff, Swing Trade Warrior with warriortrading.com. I'm going to go over tomorrow's swing trade watch list for March 17th. Ran the scanner this afternoon, or this evening, found a couple decent looking setups, and we'll go over those now, or in just a moment here. As I go through this, I get a lot of people asking questions. Feel free to type in your question there, and I'll get to it at some point during this broadcast. Also, if you have any other questions and you're watching this on a recording, feel free to email me, Jeff at warriortrading.com. So today we had another wild day in the market here. Let's see, just real quick here, we'll recap what the S&P is doing. It is now trading up and over and holding 200 support. So as long as it's trading over 200, we're safe from the previous bear area we were in for a little while here. We may return to that. Next resistance is going to be around 205. We can test that anytime here in the next few days, and we'll see. We'll see if we pass through it as easily as we did the 200. The market is definitely approaching overbought conditions, however, and I would expect the need for a breather for a short period of time, to happen here. But we'll see. We'll see what happens. The market is irrational, and it moves as such. And like I say every day, I have options for both long and short positions on the watch list each day, and I don't care which direction the market heads. It can go higher, it can go lower, and I have setups for both. So we'll start with the first one from tomorrow, BWA. This one hit the scanner. Looking at it here, we had this big, nice 4% move up today on high relative volume. It is in a very strong trend. Moving up here after earnings, down from the lows around 27 bucks. It's now trading at 37 bucks. So on this one, we're looking for a move here back to the 39.40 area, and I want to show you here a good opportunity to help determine where I find my entries and my exits. This is a good example here. So we can see back here on this day, it looks like September 24th, 2015. The low of this day was 37.33. That is going to be a support area, right? It's the pivot here for this whole move down. I rejected that area, moved right back up. So looking back here to present day, the high of today was 37.16, so it was just below this previous support area. Previous resistance does become future support. Okay, so now that, previous support rather becomes future resistance. So now we're testing that area, and given that this is a breakout strategy here, we're going to look to get long on a breakout over this resistance area. So long entry here is over 37.33 or so, and we're looking for a move back to 39.40, 39.50. You can see I found that area. If you look here, you get this nice double bottom. With a little wick down here also at support. So the previous area of support will become future resistance. So we're looking to take this trade from 37.30 to about 39.40, 39.50. Very light resistance in between there along the way. So that's the first trade, BWA. Next setup here is OI. We took this one earlier in the week. Owens here, we got stopped out prematurely. It shook us out here. Had this nice move up. Tried to break through resistance, but it could not do it. Market came in, and so did OI, which is fine. Held support here, so we're looking at this again here. There's a longer term support level here at the 1530 mark, and then we have previous support, which will become future resistance, just shy of 17 bucks. So you can see this pretty clearly here. There's not a lot of anything to interfere with this area. If I zoom the chart out all the way back to 2012, you can see that this blue line that I just drew back here in 2016 is still relevant because it was relevant in 2012. So this was a previous area of support, a pivot off of the 17 area. Again, in present day, 4 years later, it acted as that same support area before finally breaking down. So that's going to be our target on the upside. We need to get over this short-term flagging here. We see the 50 and the 200 moving averages, the white and the purple. They're starting to squeeze each other here, which means that it's time for the stock to shit or get off the pot. It's not going to trade flat. They're not going to flatline. It will make a move higher or lower. Given that we're in a bullish pattern here, we're kind of in a big bull flag following earnings. Rejected the lows. We're holding support. I believe that this is a more bullish chart, especially with the overall market conditions being as they are right now. Looking at this trade, I'm going to take my entry on candle over candle for a starter position. So the high of today was 1509. I'll take a starter position over 1509, and I'll look to add over the high of the recent range here, 1525, 1530, and then maybe even again over the high of the whole flag here, 1570 or so, because I know I'm not going to sell until we get to the 1670, $17 area. So a little over point and from entry, a little over a point and a half here. And it only moves in 80-cent increments, so the ATR is 80 cents. Don't expect this to get there in one day. It sure could, but more than likely it'll take a couple. And yes, the next higher spot is where we're going to find our targets. Good question. Next higher spot of support is going to become resistance. Previous resistance will become future support. Previous support will become future resistance. In this case, you have previous support here. And then, like I said, back here, from 2012, and you can see it's kind of acted as a pivot in all these areas. Again, in 2004, this area has been in play even back in 1996. I mean, so yeah, I mean, it's definitely going to be in play when we're trying to get back through it. It's going to be major resistance, but that's why we're getting in before. Hope that clears that up. All right, the next one is RATE, R-A-T-E. This is an interesting chart here. This thing's kind of all over the place. Just had earnings, gap down, big gap down, and then rejection of the lows and a prompt move to the upside. And we see a nice little flat top forming here just under the $9 area. We have a couple taps over it, but we've yet to break through. Looking for a long entry on this one over the top of this little flat top here. 905, 910. We do have some room here back to 1050 or so. Oops. More realistically here, oops. This resistance area at $9 is, again, kind of working off the last example from OI. This is previous support area, right? Stock sold off. Bounced on support here, gapped higher, sold off, bounced here, pivoted back up. So support is now acting as future resistance, right? Previous support has become future resistance. Tap, tap, tap. As soon as we break through this, we have pretty clean chart. We're going to get to 10 bucks one way or the other here. That's certainly the goal on this trade. And if we can get into that gap, if we can get into that gap, we should close the distance pretty quickly, but we'll see what we end up getting out of it. Keep in mind, this is still a bearish chart pattern, even though it's short-term bullish. It's trading under all the moving averages. So what we're looking for is that first cross over the 20 EMA, which is our first sign of a bullish trend reversal. Right, when we cross over the short-term moving averages, when price action does, that's an indicator of bullish or bearish strength behavior, whatever you want to call it. It's depending on which direction you're going. In this case, it'd be a bullish crossover here. All right, my short watch tomorrow is for LinkedIn, LNKD. LinkedIn, I liked it for a long. We traded it to the long side with a spread a couple weeks ago. We did okay on the move to 122, but it has failed. It has been failing to hold this 120 area since the big gap down following earnings. So what does this tell me here? Well, today there was an analyst came out, downgraded his price target. I think it was Morgan Stanley. They downgraded price target on LinkedIn from 190 to 125. Excuse me, I'm losing my voice. And the stock didn't like it, so it gapped down and sold off 5% today. I do like this for a move back and a test of the lows here under 108. for move back down to the 98 area here. This is a 10-point range. There's no other resistance here, but given the recent weakness in the stock and now the downgrade, shorts could really start piling in here and hammering this thing. So under 108, look to take a starter. This is cool because we can do an option spread here also. We'll check the implied volatility at the time of the trade, but you could do a put debit spread for low implied volatility because we're looking to buy the implied volatility here. We're looking to buy the volatility for it to increase as the sell-off accelerates. Conversely, if this is a high at a high implied volatility compared to historical, then we can look to sell a credit spread and profit on the same move to the downside. Either way here, or you could short it with stock. Doesn't matter. In this case, LinkedIn is liquid enough for options. I have a lot of people ask me about the spreads and the iron condors and things that we've been trading with earnings. And I encourage you guys, if you have any questions, as I mentioning this stuff, terminology you might not be clear about, write it down and then go look it up at investopedia.com or cboe.com, the Chicago Board Options Exchange. They're both incredible resources for new traders, and they answer a lot of those basic questions and a lot of the more complex or advanced questions you might have. All right, so those are my watch list items for tomorrow. Oh, let's not forget my earnings watch for tomorrow is Adobe. Adobe has put in a massive move up off the lows here from 72 to 88 in just a few weeks. Now, this is a big, heavy stock. This has a huge float, and so for it to move this much is, it's impressive. It's definitely something. It's definitely something that the market makers have taken into account, and the market maker move, the implied move for earnings tomorrow after the close is $5.50 or something. I don't remember exactly, but we're looking to do maybe an iron condor on this. We'll sell the volatility and try and capitalize on the credit, and we'll set it maybe 7 points. We'll give it 7 points between the short strikes there, or between the strike and the underlying trade price. So we're looking for the trade to stay under 7 points after earnings, so either 95 to the upside or 81 to the downside. Either way, anywhere in there we could profit. So we'll see what the implied volatility looks like tomorrow, what the price action looks like, and we'll evaluate our trades at that time. But it's in the watch list for our earnings play tomorrow. That does it for me. I'm losing my voice. I don't know why. I've been talking a lot today, but I'm going to go eat dinner. Maybe that'll make me feel better. If you guys have any questions as you're watching this, please don't hesitate to ask Jeff at warriortrading.com. And I hope everybody has a great night. See ya.